Hey, what's up, everybody? How's everybody doing? I haven't had time. This is the first minute I've had to do a video. I was very busy this morning doing big things. Big things. Big things. So what's up? By the way, I just sent out an email to all MMT Traders subscribers and people who are on a 30-day free trial with the complete breakdown of the oil inventory report that came out earlier today. And my analysis of it and my forecast. If you want a copy of that email, if you are not on the mailing list, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. You'll see it right on the homepage. It says, get the 30-day free trial. Just click on that, sign up, and I will gladly send you that email. And of course, then you have a 30-day free trial. You will receive a copy of the current report, and you have access to all the back issues. So, regarding the stock market, up once again. I've lost count how many days in a row we have been up, but I cannot recall a down day. Now, I have been looking around, scouting around for some clues, some information. Now, you all of you know, my monetary thesis, my monetary position on this. The monetary underpinning is deteriorating. Whether you are looking at credit growth, whether you are looking at the fiscal flows, whether you are looking at net exports, which is another way simply to say net spending by the foreign sector, whether you are looking at the domestic non-governmental sector, whether that's households or businesses. Businesses, we can say there has been some net spending, but that's been in inventories and it has been in residential construction. All right, so residential construction will probably continue. The inventories, they build up on shelves, they have to be sold, otherwise you have the problem of an inventory overhang. So, just to distill it down, the monetary underpinning, remember, money drives everything, okay? You got to have money to keep buying the market up, all right? So, the credit growth is collapsing. And now I'm not the only one who is pointing to this. We had that thing yesterday. I showed you that analytical report from UBS, which talked about a global collapse in the credit impulse. They call it the credit impulse, okay? That's credit demand. And of course, I showed you, those of you who are on the MMT Trader list, I've been sending out to you the charts of the collapse in fiscal flows. Now, that might ultimately at some point reverse itself, because we know what that is. Those are the tax refunds. But, people are getting pinched. Firms are getting pinched. I have more anecdotal evidence from people who are emailing me. By the way, great emails, great questions coming in. So, technically, that's the fundamental aspect. Okay, there's no getting around it. It's all about money. Money drives the markets, and the money condition is deteriorating, all right? Next, I'm looking for something technical, and I'm not necessarily talking about in the charts. I'm looking at, we've seen this. I've been telling you that the open interest, and particularly on the part of the institutional asset managers, their net long position has been growing and growing and growing. Meanwhile, the net short position of the dealers, the Wall Street guys, the Goldmans, the JP Morgans, the Morgan Stanleys, that's been growing. Speculators have been curiously short throughout this whole thing. They've whittled down, they've brought down their short position, but they're just short. I'm trying to understand that. But it's been the asset managers buying. Now I'm trying to look for in the open interest. Remember, for the open interest to go up one contract, you need a new long and a new short. All right, so it's been growing. I'm looking for a day when that thing starts to blow out. In other words, come down. In other words, some group in that picture, whether it's the asset managers or the Wall Street guys or the speculators, say, that's it. I tap out, right? I'm tapping out. I'm out of here. I have not seen that yet. I give you all the facts. You know my position. I give you all the facts. We were at 3,018,000 contracts net total open interest in the S&Ps in E-mini last Tuesday. I'm talking about not this past Tuesday, the one before. We are now at 3,088,000 or 58. I forget the exact number, but we're up. So there's been no sign of any group in there tapping out. When you see that, it's probably an indication that we've reached some level where people, they're either saying that's it or forced liquidation. Dealers saying you're out of here. So I'm keeping an eye on that. All right. Anyway, if you want to get a copy of these things, the emails that I just sent out, go to my website, pitbulleconomics.com, and click on the tab that says Get the 30-Day Free Trial. I will send you all the stuff. See you later. Bye-bye.